Cap. Weekly time frame, what do we see? We have the high and we have the low. Here's a range. Here is our weekly open. And just marking out the ranges. So we see we have this Wednesday turtle soup, high of the week, Wednesday reversal. So you expect to target the 50% of the previous range. You can see the consolidation around the 50% confirms this is the range in use. So let's see what we have. Once Thursday, it hit the target. So at this point, you can either expect a continuation or expect a reversal. Well, we see this 4-hour candle range right here, this external. So this is now what I'm trading inside of. This is my range. Everything else now was just background context to why this is my current range. Before the day started, let's go to the 5 a.m. candle here. And we can see that we mark out the low and the high. Also, you can see the high of this candle was just the NFP candle. So what we'll do is we'll just mark it out as data highs and data lows. This was our range for the morning, right? So this is now the current range we're trading. Before all this happens, let's mark out the day. So day starts at 6 p.m. Then we'll do the daily open, midnight. And we see, because we always frame our days and frame our trades off of midnight. Whatever happens between 6 and midnight, usually I'll not ignore it, but I place more importance on the midnight. And we can see that 3 a.m. London session put in what I would consider the low of the day, because we have this range right here. Four-hour range. Mark out the 50%. So these are our targets. So let's go down to the 15. We're expecting higher prices. London made the low. We have an order block created right here, which is just underneath our range that we're going to trade, which is the NFP candle, right above a significant PD array. So this is our key level. And now let's go to the 5-minute. Let's mark out 9 a.m. can see price opens up. This is the 9 a.m. candle open. So the only two times I ever have marked out for trades are 9 a.m. and midnight. So 9 a.m. opens. I'm waiting for a turtle soup of this range to target the highs and then the 50%, and then eventually higher up if the trend completes. So we keep going. We're in the low. We hit the key level once. It was not a close. It was a wick on the 5, so ignore that. We have a close below. That's our turtle soup. Into our key level, you can refine it even more. Use the 5-minute order block, because regardless, your stop loss will be right here. Because this low, if it's actually the low of the day, will be protected. So this is a safe stop loss, right? You could either enter right here if you're confident, if your risk allows it. I didn't take that entry. I wanted more confirmation because of the current market conditions. So I wait for a close above. We get it right here. We create the order block / model 1. And this candle right here is the one that I entered off of with a limit order. Stop below the protected low. Target the highs. It's nice slow 1.8, almost 1.2. And then my second TP was 1 to 3. So TP1. Take profit 2. Take profit 3 was, well, I took it, a left hook kind of runner, and ended up being about right there for a 1 to 6 total. Something like that. Always leave runners just in case. And we can see ran straight to our targets. So hit the 50%. It's a great trade. You can see there's my executions. Enter at the order block. Sell at the high. Sell at a 1 to 3. And then leave a runner. And that's that.